How's it going, everyone? It's Sam. Jerome Powell just gave a couple warnings I want to talk to you about, and he spoke about an hour ago. So far, the market's been down since he spoke, with Bitcoin falling a decent amount and with the NASDAQ going all the way to negative 0.6% while he was speaking. I want to show you that along with some other information. I'm going to keep it nice and short here for you because I got to go. But if you want to trade this market, now is the time to be putting in long positions, in my opinion, before we continue to see more economic data come out, which at this point, it looks pretty decent. Before we get more rate cuts, you can check out the link underneath the video to Margex, where you can put long positions on, you can put short positions on. You can sign up with that link. You don't need a KYC, meaning you don't have to give out your personal information either. So definitely check that out underneath the video. Even with this dip, we are up a good amount on a lot of our positions here. So let's start here. Actually, before we get into Jerome Powell, we can see a bit of a rejection on total 2. You know, this isn't the best trend line, as I've said a couple times, but you can see generally this has been the trend line where we pretty much get rejected within a day or two. And yeah, it looks like we're getting rejected now. Bitcoin also is falling down about to that 200-day moving average. Slightly below it now. Of course, some of this will, some of the reaction after Jerome Powell speaks is just short term. Sometimes we see a bounce like the very next day, even like when they cut by 50 basis points, there wasn't a big move, but then the next day the NASDAQ was up about 3%. So who knows what happens here in the next day, but we can see too that the DXY is falling. This is typically a good sign for Bitcoin. When it falls under 100, that's quite bullish typically. You can see back in 2023, we actually rallied up a lot in 2023 for Bitcoin, and we did fall down to about 100. And when we've seen the DXY fall below 100 the last couple times, this did signal a bull run. And we peaked out pretty much at the top typically of when DXY was at the bottom, right? They're inversely correlated. So hopefully we continue to see the DXY fall for risk on assets. Of course, we'll have to see too what the inflows look like today. I'll probably be making another video either today or tomorrow on this. We also have Mr. 100 grabbing 200 Bitcoin. It's been a while too. He sold maybe midway through the month. He sold a couple, maybe 1,000 or so Bitcoin, but now it's swallowing up some more Bitcoin after waiting a bit. Now, all eyes were on Jerome Powell today. Obviously, we have some big economic data coming out later this week, but everyone seemed to be watching Jerome Powell. He said, one of the things they said was that they're expecting just about 2 additional rate cuts this year, totaling 50 basis points. Now, this is different than what we're seeing on the Fed rate monitor tool, which shows 125 basis point drop for the year, which means another 75 basis points after that first 50 basis point. So he's saying, yeah, at this point, unless we have some data that skews us, we are looking at just 50 basis points. Now, I believe he's referring specifically to something that they've already put out, which gives their economic predictions on where they see interest rates at the end of the year. So he's not necessarily giving his opinion, but he's just saying based on what we've already said, we're expecting 50 basis points. So not the biggest deal there, but I think the market doesn't really like to hear 50 basis points. We want to think of 75 and maybe even 50 basis points at the next meeting. He also talked about how the labor market gives us a better indication and better data than GDP. So a better indication of how the economy's doing. So we've had really good GDP numbers, but data from the labor market has started to get worse, started to weaken. So this also doesn't sound great. Like, okay, hey, don't pay attention to the thing that's doing well. Pay attention to the thing that's doing poorly, because that gives us better data on what's going to happen next. So again, the market didn't really like that. Also, they asked, did the 50 basis point cut give extra confidence in the soft landing? He had a big pause, probably 3-4 seconds, and then said it reflects confidence in 2% inflation. So not necessarily saying like, hey, we think that this 50 basis point will help us achieve a soft landing. Just saying, yeah, we don't really know if it's going to help. It's just that we think inflation has been has been tamed. So again, just something that just didn't hit the market the right way. I think it just sounds a little bit off. It doesn't instill a bunch of confidence. Keep in mind though, the market's done really well since he started lowering rates. Bitcoin has been up and away. The NASDAQ is hitting new all-time highs. S&P 500, Dow, all that is hitting new all-time highs. So he might just be trying to talk down the market a little bit. Obviously, if good economic data comes in, he can go out and say, hey, yeah, we're going to lower by 50 basis points. But why make the market think that's already going to happen, which could cause more inflation? And if there's inflation and high unemployment, then you have to go and stop lowering rates. And then unemployment gets worse, and then we go into recession, right? So he wants to toe the line. Right now, he doesn't really care. He would actually, I think, prefer if assets didn't run away, right? He does not want this to run away from him. The stock market to continue to go up 10% or something like that throughout the rest of the year would not be good for inflation, and would maybe mean that they have to continue, again, with rates a little bit higher, causing an issue in the labor market. So he doesn't care if he sounds dovish or hawkish, really. He's just trying to balance those two out to get the outcome that they are trying to achieve. So at the end of the day, I think we just continue to watch the data come in. Yeah, we'll pay attention to what Jerome Powell's saying, but I don't think he said anything groundbreaking here today by any means. I think we'll just have to continue to watch the data that comes in. That will inform our decision on whether the Fed's going to cut by 25 or 50 at the next meeting. Either way, unless something really bad comes out, we're still going to end the year another 50 basis points down. That will help the market. That will help stock market, crypto. That will help the labor market as well. That will take a little bit longer, but I think this is all pretty bullish. I think we're still in bullish territory long term. A little bit of a dip on Bitcoin is completely fine. Like if this dip scares you, you're in the wrong asset. You have to be ready for big dips. Of course, we are down 4%, so that is a pretty big drop. You can see some cryptos though are still breaking out, like BitTensor on the last 1 year, massive breakout here, just over the last couple months, and actually over the last couple weeks. You can see it's up 105% in the last 1 month. So certain assets are still doing fine, doing really well. Obviously, let's actually look at BTC.D, look at Bitcoin dominance here today. It has been coming down, which, probably healthy for some altcoins, makes everyone feel a little bit better, I think, when the dominance falls down every once in a while. But of course, do your own due diligence. Let me know your thoughts on this underneath the video. Do you think this is scary, this warning? Or do you think this is just part of the game? Thank you so much. Check out the link underneath the video to Margex, where you can start trading cryptocurrency using leverage. Make sure you know what you're doing before you start trading, though. Thank you so much, and I'll see you all in the next video.